Monthly dividend stocks have instant appeal for many income investors. Stocks that pay their dividends each month offer more frequent payouts than traditional quarterly or semi-annual dividend payers. In addition, stocks that have high dividend yields are also attractive for income investors. With the average S&P 500 yield hovering around 1.3%, can you believe it? Investors can generate so much more income with high-yield stocks. Screening for monthly dividend stocks that also have high dividend yields makes for an incredibly appealing combination. Isn't that exciting? This video will list the 20 highest-yielding monthly dividend stocks. The following 20 monthly dividend stocks have high dividend yields above 5%. Stocks are listed by their dividend yields from lowest to highest. The list excludes oil and gas royalty trust, which have extreme fluctuations in their dividend payouts from one quarter to the next, due to the underlying volatility of commodity prices. High-yield monthly dividend stock. Chape d'Ivoire. 20. Sur Royalty Income Fund, SIIRZF. Dividend. Yield, 8.1%. Sur Royalty Income Fund is a Canadian entity which collects and distributes a dividend stream based on royalties earned from the Jack Astor's, Scatterbush, and other restaurant brands. The parent Cesar Corp retains about 16% ownership of the fund, helping align its interests with shareholders. Cesar Royalty has claims on the royalties of 52 restaurants, with most located in the Greater Toronto metro area. The company's main brands are the Jack Astor's Bar and Grill concept and the Scatterbush Italian chain. In its recent Q2 results, revenues rose 8.1% year-over-year, primarily from new restaurant openings, while same-store sales saw a modest 1.1% increase. The Scatterbush brand showed strong growth, though the larger Jack Astor's brand saw a slight sales decline. High-yield monthly dividend stock number 19, Slate Grocery REIT, SRRTF, dividend yield, 8.2%. Slate Grocery REIT is a Toronto-based, yet US-focused real estate investment trust focused on grocery-anchored retail centers. It owns 116 properties valued at about $2.4 billion. Its portfolio is deeply rooted in necessity-based retail, with top tenants including Kroger and Walmart, and boasts an anchor occupancy rate of 98.8%. In its recent Q2 results, total revenue grew 2.1% year-over-year, driven by rental rate increases. However, profitability was pressured by higher expenses, and funds from operations, or FFO, remained unchanged at 0.25 per unit. Healthy leasing activity supported a stable occupancy rate. High-yield monthly dividend stock. Number 18, In-Play Oil Corp. IPUF. Dividend. Yield, 8.6%. In-Play Oil is a Calgary-based oil and gas company focused on developing light oil and natural gas assets in Alberta. In-Play combines horizontal drilling and enhanced oil recovery to maximize efficiency. Last year, it averaged over 8,700 barrels of oil equivalent per day in production. In its recent Q1 results, In-Play Oil reported a 25% year-over-year revenue decline to $23.9 million, caused by lower commodity prices and a dip in production. Adjusted funds flow per share fell to 0.09 from 0.13 a year prior. For the full year, we expect AFF per share of 0.75. High-yield monthly dividend stock, Bomber 17, Firm Capital Property Trust, FRMUF, dividend yield, 8.8%. Firm Capital Property Trust is a Canadian REIT that owns a diversified portfolio of industrial, multi-residential, and retail real estate. The trust emphasizes capital preservation and disciplined investing. Its portfolio includes over 2.5 million square feet of commercial space, alongside nearly 600 apartment units and over 500 manufactured home community sites. In its recent Q2 results, Firm Capital reported rental revenue of about $11.2 million with high occupancy across its portfolio. Net operating income was $7.0 million, and funds from operations, or FFO, came in at 0.128 per unit. For the full year, we project FFO per share of $0.38. High-yield monthly dividend stock, Bomber 16, Bridgemark Real Estate, BRUF, dividend yield, 9.2%. Bridgemark Real Estate Services is a leading Canadian real estate services company that provides branding and technology to over 21,000 realtors across Canada. Its portfolio includes nationally recognized brands such as Royal LePage and Via Capitale. The company earns revenue primarily from franchise fees, generating stable cash flow. In its recent Q2 results, total revenue was $78.8 million, down slightly, due to a softer Canadian real estate market. The company recorded a net loss, but adjusted EPS was $0.10, down from $0.12 a year ago, reflecting lower revenues and higher expenses. High-yield monthly dividend. Stock. Number 15. Petrus Resources. PRQNF. Dividend. Yield. 9.2%. Petrus Resources is a Canadian junior oil and gas producer based in Calgary, Alberta, focused on low-cost, liquids-rich natural gas and light oil assets in Western Canada. The company's operations are concentrated in its core Ferrier area, where it targets the Cardium Formation using horizontal drilling and multi-stage fracturing. In its recent Q1 results, Petrus reported revenue of roughly $21.8 million, with lower realized energy prices impacting results. Adjusted funds flow was $0.09 per share, down from $0.11 a year prior. Total production averaged 6,639 barrels of oil equivalent per day, a slight decrease from the prior year. High-yield monthly dividend stock. Number 14, Timber Creek Financial Corp. Under TBCRF. Dividend. Yield. 9.2%. Timber Creek Financial is a Canadian non-bank lender specializing in shorter duration, structured financing solutions for commercial real estate investors. The company provides primarily first mortgage loans for income-producing properties, including multi-residential, retail, and industrial assets. Timber Creek's portfolio is 100% commercial real estate focused and highly urban. In its recent Q2 results, Timber Creek reported a decline in key metrics. Distributable income fell to $0.13 per share from $0.15 a year prior, reflecting lower portfolio yields and higher credit loss provisions. Net investment income and net income also decreased year over year. High-yield monthly dividend stock. Number 13, Cardinal Energy Limited, CRLFF. Dividend yield, 9.2%. Cardinal Energy is a Canadian oil and gas producer operating primarily in Alberta and Saskatchewan, with a strong focus on conventional light and medium oil. Its operations are centered on mature, low-decline fields, where enhanced oil recovery methods are used to maintain stable production. With over 90% of production weighted to oil and NGLs, Cardinal's operations are heavily oil-driven. In its recent Q1 results, Cardinal Energy's revenue fell 16% year-over-year to $64.8 million, mainly due to lower commodity prices. Production remained flat at around 20,900 barrels of oil equivalent per day. However, operating income was impacted by margin compression from weaker pricing and higher costs. High-yield monthly dividend stock, Year 12, Gladstone Commercial, Good. Dividend yield, 9.8%. Gladstone Commercial Corporation is a REIT that specializes in single-tenant and anchored multi-tenant net-leased industrial and office properties across the U.S. The trust's stated goal is to pay shareholders monthly distributions, which it has done for more than 17 consecutive years. Gladstone owns over 100 properties in 24 states. In its recent Q2 results, FFO per share was 35 cents, meeting estimates, while revenue grew nearly 7% year-over-year to $39.5 million. The trust maintained a high portfolio occupancy of 98.7%, with a 67% concentration in industrial tenants, and raised $38.1 million in a common share offering. High-yield monthly dividend stock, Number 11, Ellington Financial, EFC. Dividend yield, 11.9%. Ellington Financial Inc. acquires and manages mortgage, consumer, corporate, and other related financial assets in the United States. The company acquires and manages residential mortgage-backed securities, or RMBS, backed by a variety of residential mortgage loans. It also provides collateralized loan obligations, mortgage-related derivatives, and other strategic investments. In its recent Q2 results, gross interest income was flat at $115.5 million. However, adjusted distributable EPS rose to 0.47, an 8-cent boost year-over-year, driven by strong performance in its credit strategy. Book value per share also increased slightly to $13.49 after accounting for dividends paid. High-yield monthly dividend stock, Mucker 10, Stellus Capital, SCM, dividend yield, 12.2%. Stellus Capital Management is a business development company that provides capital solutions to companies with $5 million to $50 million of EBITDA. Stellus provides first lien, second lien, and mezzanine debt investments to a diverse group of customers in the US and Canada. In its recent Q2 results, Stellus reported net investment income of 34 cents per share. Total investment income was $25.7 million, down slightly year over year, while higher expenses also contributed to a decline in overall net investment income. The investment portfolio saw a net unrealized appreciation of $1.4 million during the quarter. High-yield monthly dividend stock, number 9, Pennant Park Floating Rate Capital, PFLT, dividend, yield, 14.1%. Pennant Park Floating Rate Capital is a business development company that makes debt, equity, and loan investments. The fund primarily invests through floating rate loans in private or thinly traded middle-market companies. In its recent Q3 results, Pennant Park reported core net investment income of 0.27 per share, comfortably covering its dividend. Management enhanced liquidity by amending its credit facility to lower interest costs and extend maturities. Credit quality remains strong, with minimal non-accrual loans. The company also raised $32 million in equity and established a new $500 million joint venture to focus on senior secured loans. High-yield monthly dividend stock, number 8, AGNC Investment Corporation, AGNC, dividend yield, 14.5%. AGNC Investment Corp is a mortgage real estate investment trust that invests primarily in agency mortgage-backed securities, or MBS, on a leveraged basis. The firm's asset portfolio is comprised of residential mortgage securities and collateralized mortgage obligations, many of which are guaranteed by government-sponsored enterprises. In its recent Q2 results, AGNC reported a comprehensive loss of 0.13 per share. Net spread and dollar roll income was 0.38 per share. However, tangible net book value per share decreased 5.3% to $7.81, resulting in a negative economic return for the quarter. The company maintained leverage of 7.6 times tangible net book value and raised $799 million through share offerings. High-yield monthly dividend stock, number 7, Dynex Capital, DX, dividend yield, 16.3%. Dynex Capital invests in mortgage-backed securities, or MBS, on a leveraged basis. It invests in both agency and non-agency MBS, consisting of residential and commercial mortgage-backed securities. In its recent Q2 results, Dynex reported a total economic loss of 0.10 per common share. Despite declaring dividends, the company recorded a comprehensive loss for the quarter. Dynex raised $282 million in equity capital, investing heavily in agency mortgage-backed securities, and ended the quarter with leverage of 8.3 times shareholders' equity. High-yield monthly dividend stock, number 6, Ellington Credit Co. Earn, dividend yield, 18.0%. Ellington Credit Co. acquires, invests in, and manages residential mortgage and real estate-related assets. Ellington focuses primarily on residential mortgage-backed securities, specifically those backed by a U.S. government agency or U.S. government-sponsored enterprise. In its recent fiscal quarter results, the company generated net income of $10.2 million, or 0.27 per share. Ellington achieved adjusted net investment income of $6.6 million, or 0.18 per share. At quarter end, Ellington had $36.6 million in cash and cash equivalents. High-yield monthly dividend stock, number 5, Armor Residential RAD, ARR, dividend yield, 18.7%. Armor Residential invests in residential mortgage-backed securities that include U.S. government-sponsored entities such as Fannie Mae and Freddie Mac. It also includes securities guaranteed by Ginnie Mae. These are backed by fixed-rate, hybrid adjustable-rate, and adjustable-rate home loans. In its recent Q2 results, Armor reported a GAAP net loss of 0.94 per share. However, distributable earnings were 0.77 per share, covering the dividends paid. Book value per common share decreased to $16.90 from $18.59 in the prior quarter, resulting in a negative total economic return. The company ended the quarter with a debt-to-equity ratio of 7.7 to 1. High-yield monthly dividend stock, number 4, Prospect Capital, PSEC, dividend yield, 19.6%. Prospect Capital Corporation is a business development company, or BDC, that provides private debt and private equity to middle-market companies in the U.S. The company focuses on direct lending to owner-operated companies, as well as sponsor-backed transactions. Prospect invests primarily in first and second lien senior loans and mezzanine debt. Prospect's recent fourth-quarter results were weak, with net interest income falling to 17 cents per share from 25 cents a year ago. Total revenue plummeted 21% year-over-year to $167 million. With repayments and sales outpacing originations, the company's investment portfolio shrank to $6.67 billion, down from $7.72 billion a year prior. High-yield monthly dividend stock. Number 3, Orchid Island Capital, ORC. Dividend yield, 20.1%. Orchid Island Capital is a mortgage REIT that is externally managed and focuses on investing in residential mortgage-backed securities, or RMBS. These financial instruments generate cash flow based on residential loans such as mortgages, subprime, and home equity loans. In its recent Q2 results, the company recorded a net loss of $33.6 million, or 0.29 per common share. Dividends declared and paid were $0.36 per common share, with book value per share at 7.21 by quarter end, reflecting a negative total return of 4.7%. Liquidity remained strong at $492.5 million. High yield, monthly dividend stock. Number 2, Horizon Technology, HRZN. Dividend yield, 21.6%. Horizon Technology Finance Corp is a BDC that provides venture capital to small and medium-sized companies in the technology, life sciences, and healthcare (IT) sectors. The company generates returns through directly originated senior secured loans and additional capital appreciation through warrants. In its recent Q2 results, Horizon's total investment income fell 4.5% year-over-year to $24.5 million. Net investment income per share fell to $0.28, and net asset value per share dropped to $6.75. However, the company maintained a significant cash cushion with $0.94 per share in undistributed spillover income, and management affirmed the dividend by declaring it for the next 3 months. High-yield monthly dividend stock. Number 1, Oxford Square Capital, OXSQ. Dividend yield, 26.3%. Oxford Square Capital Corp. is a BDC specializing in financing early and middle-stage businesses through loans and investments in collateralized loan obligations, or CLOs. At the end of last quarter, its portfolio was allocated approximately 61% in secured debt, 38% in CLO equity, and about 1% in other investments. In its recent Q2 results, Oxford Square's total investment income was $9.5 million, a decline both sequentially and year-over-year. This was mainly due to lower interest income, as yields on its CLO equity investments slipped. Net investment income, or NII, came in at $0.08 per share, down from $0.13 per share in the same quarter last year. Monthly dividend stocks could be more appealing to income investors than quarterly or semi-annual dividend stocks. This is because monthly dividend stocks make 12 dividend payments per year instead of the usual 4 or 2. Furthermore, monthly dividend stocks with high yields above 5% are even more attractive for income investors. The 20 stocks on this list have not been vetted for dividend safety, meaning each investor should understand the unique risk factors of each company. That said, these 20 dividend stocks make monthly payments to shareholders and all have high dividend yields.